Hey, welcome back everyone. So we're going to go ahead and run a DCF model on Home Depot and try to get an idea of what its true intrinsic value currently is. To build this model, we're first going to have to go ahead and figure out not only a revenue growth rate, but also a free cash flow margin to apply to the model. Now, over the next 2 years, the average analyst has Home Depot growing at 1.8%, and then the following year, 3.9%. Now, we're going to go ahead and go with 3%. This didn't take long for me to really think of. The reason I don't have a problem putting it as low as 3% for Home Depot is mainly two reasons. One, if we really do have harder times coming economically or a recession, people aren't as likely to go to Home Depot and spend silly amounts of money to do their little home projects or whatever people tend to do at Home Depot. But two, and this is probably even one of the bigger reasons, I see this housing boom slowing down, and I think you can already sort of see it slowing down if I'm being honest. So if the boom slows down, not as many houses being built, and that's over the next 5 years, I guarantee that's probably going to slow down. Then these companies building the homes aren't going to be going to Home Depot off the cuff as much as they have been. Over the last 5 years, the free cash flow margins read as the following: 10%, 9.9%, 10%, 12.4%, 9.26%. Now, there were a couple that were in the nines, and I think just for the sake of being conservative, we'll go ahead and round our free cash flow margin down to a solid 9. Okay, so revenue growth rate over the next 5 years of 3%. Free cash flow margin of 9%. Let's jump into the model now. Okay, we have Home Depot growing at a rate of 3% over the next 5 years, puts it to about $175.2 billion. Applying the free cash flow margin of 9%, we get projected free cash flows into the future. Of course, we get our terminal value by applying a weighted average cost of capital and a perpetual growth rate. After that, we need to apply our discount rate, the rate of return we want, which I mainly use 12%. After that, we add all the values up, divide by shares outstanding, and the intrinsic value is about 204.7, or we'll give them the benefit of the doubt and round it up to $205 a share. Okay, everyone, so Home Depot's current share price is around $282 a share. According to the model, Home Depot is definitely pretty overvalued as of right now. So according to the model, I would definitely not be buying Home Depot shares at the moment. Okay, everyone, that's all I've got for you guys. I hope you enjoyed watching and this was helpful, and I'll see you in the next one.